Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. This week we'll focus on Chinese consumer inflation and producers' price index. These are better known as CPI and PPI and are scheduled for release on April 10th. China usually releases this data on a monthly basis in the middle of the following month. China is likely to cut interest rates or reserve requirements again if consumer inflation drifts below 1%, a member of the central bank's Monetary Policy Committee said, as he ruled out more support for the sagging Chinese property market. Qian Yingyi said policymakers still need to monitor the inflation data for March and April to judge if deflation pressures were deepening in the world's second biggest economy. Having seen China lower interest rates twice since November and also cut the level of cash banks must hold as reserves last month, most investors assume that China will further loosen monetary policy in coming months to buoy an economy that is on course for its worst year in a quarter of a century. China's annual rate of consumer inflation quickened to 1.4% in February from a 5-year low of 0.8% the previous month. But Qian said the bounce could be a one-off blip as a result of the Lunar New Year holiday. Just a few weeks ago, Chinese Premier Li Keqiang lowered the government's consumer price inflation target to around 3% from 3.5% last year, acknowledging disinflationary pressures. It was, however, producer prices data released on Tuesday that fueled worries about the deflationary forces for the producer sector. The Producer Price Index is a family of indexes that measure the average change over time in the selling prices received by domestic producers of goods and services. PPIs measure price change from the perspective of the seller. This contrasts with other measures, such as the Consumer Price Index (CPI), that measure price change from the purchaser's perspective. Sellers' and purchasers' prices may differ due to government subsidies, sales and excise taxes, and distribution costs. China's Producer Price Index dropped 4.8% from a year ago, worsening from January's 4.3% drop and marking 3 full years of declines. The gauge has remained in negative territories for 36 consecutive months. Goldman Sachs said the data was below market expectations. This month, authorities will be comfortable with inflation running between 1% and 2% in current circumstances, compared with the government's 2015 inflation target of 3%.